So tonight's game plan is going to help prepare you to trade the SPY heading into this week. I'm going to show you the exact levels where I'm planning to buy call options to make money as SPY is going up, and the exact levels where I'm planning to buy put options to make money as SPY is going down. I'm going to be walking you through this unique day trading price action analysis that I've created. Let's get straight into the price action analysis. So in terms of the SPY, we're going to be starting off with the daily chart. In terms of the daily chart, as you can see, we had previous resistance right here at 585 to 583.50. Once the SPY broke above that previous resistance, it began to skyrocket to new all-time highs at $600 a share. Then it quickly dropped right back down to that previous resistance. As you can see, we do have a double bottom attempt where the SPY is attempting to turn that previous resistance zone into support. So it is attempting to react bullish for the short term being. Now, in terms of the overall, patterns that I'm seeing on the SPY, basically what I'm seeing is, and I've highlighted these patterns out here for you. Basically, in terms of what this looks like, I'm simply comparing this overall pattern, this like slanted downtrend, then the SPY gaps down, this overall, slanted downtrend, then the SPY gaps down. And then this daily bearish candlestick looks very similar to this daily bearish candlestick, along with, just throughout all these patterns that I'm looking at. So basically what I'm seeing is there's going to be dip buying opportunities, and there's also going to be opportunities to short at resistance, right? So looking throughout these daily overall patterns, this is what I have to say. If the SPY ends up gapping up, it's likely going to be a gap and go. So in terms of a gap and go situation, you're going to want to be buying when the resistance levels have a breakout. Wait for the SPY to drop back down to retest that previous resistance level, buy the dip the first time on the retest, the overall breakout and retest. Now, with that being said, in terms of like levels where you could potentially do this at, because as you can see, the SPY is currently gapping up. We ended up closing at 585.75, previous closing price, right? So with that being said, in terms of like previous resistance levels where you can show interest in buying the dip, again, this is if the SPY does end up gapping up tomorrow, opening up higher than the previous closing price. These would be the levels that I would want you to keep a very close eye on to potentially buy that dip if the SPY gaps up. So you can keep an eye on 586.50, and you can also keep an eye on 587.30. Those two previous resistance levels, if the SPY is gapping up, you can look to potentially buy the dip for the overall breakout and retest. Now, with that being said, in terms of potential resistance levels, right? Now, when you're doing this, use strong bearish 30-minute candlestick confirmations. If it's gapping up, be very careful on puts. It's likely not going to be the greatest opportunity to attempt puts if we are gapping up. But if we do hit these levels and you're seeing strong bearish 30-minute candlestick confirmations, you can consider trying puts. So in terms of these levels, just make sure that you're using strong bearish 30-minute candlestick confirmations. So you can keep an eye on 589.64, right? This previous support around here to react as a resistance. And then you can keep an eye on 591.30. And then later into the week, if we do end up closing this gap, this would be the overall best level for the gap reversal on SPY at 593.35. Based off of what I'm seeing on the overall daily chart pattern, this could be a potential good opportunity to scalp puts towards the previous day highs at 590.20. If not, then the resistance level in the pre-market towards this 591.30 zone. Now, the best level, which would be very unlikely to hit tomorrow, would be 593.35 for a gap reversal. So that's later into the week, man. I'm telling you, the SPY has been consistently reversing at almost every single gap throughout the past 40 plus days. So keep a very close eye on that 593.35 for puts. But based off of what I'm seeing, if we are gapping up, it's going to attempt to be a strong bullish day. We're going to want to focus on when the SPY breaks out, wait for it to drop back down to that previous breakout zone, buy the dip on the overall retest, use the 30-minute chart, right? That's mainly just if we're gapping up. And if we are gapping up and you want to attempt puts, or if you're seeing a strong bearish 30-minute candlestick confirmation, again, use very strong confirmation if we're gapping up. You could try the 591 to 590 overall resistance zone, right? Now, let's discuss if we're kind of opening up flat or even if we're gapping down. So if that is occurring, the main focus heading into tomorrow is going to be buying the dip. So the previous closing price is going to be make or break. 585.75 is going to be make or break on the overall SPY, right? Now, with that being said, in terms of like just looking at the 10-day, 30-minute chart right here, the main levels where I would be interested in buying calls would be towards the previous day lows in between this zone of like 584.60 to 583.80 towards those previous day lows, right? And then in terms of, for the bears to take full control, they would have to crack and turn this into overall resistance. It would mainly have to be this like 582.50 support level, right? So in terms of situations where we have a gap breakdown, so I'm going to walk you through this. I'll show you here. Let me disable extended hours. So you could see right here, man, this really clears things up. This was previous support. It reacted as a resistance. The SPY started to drop back down, try to fill the gap below, but you got to look at the extended hours chart because there's very strong support, which is why I drew this level here at 582.50 in the pre-market. That's like, in order, like for those of you who are wondering, like when is this gap going to fill? For that gap to actually fill, we would have to go under the extended hours chart. So the extended hours support level. So you could just see right here, man, this very strong wick that formed at 582.40. Once it cracks, there's really not much support until the gap that's waiting to fill below at 577. So for the bears to take full control in terms of like a key breakdown situation, or if you were trying to buy put options at these more oversold levels for the micro, they would have to crack this 582.50, drop it down, spike back up, form lower highs, form new resistance, and maintain under that. If the bears cannot do that, the SPY is just going to be great opportunities to be buying the dips at these levels that I drew out, 584 to that 584.50 zone, right? And then if we gap up, we're going to focus on the higher levels, right? Now, based off of what I'm seeing on the daily chart, I do think, if we're opening up flat or just gapping down, the best thing we could really do is focus on buying the dip. The daily chart pattern is showing that it is going to recover for the overall short term in terms of opening up flat and gapping down. For the day trading situation, to be buying an overall dip rather than thinking it's going to drop, 582.50 and then go straight down to fill the gap. Very, very unlikely in that situation, in my opinion, for the short term being, right? So I'm telling you, buy the dips on the oversold territory if we're opening up flat or gapping down. And then if we're gapping up, aim for the higher levels, right? So like I told you, man, for shit to just hit the fan and for the bears to be in full control, they'd have to go through 582, and it's just unlikely to crack and then spike back up, form lower highs. Very unlikely for the short term being, again, for the short term being. So now I want to kind of just break this down to you, just show you how simple this is. So 584, this is the new gap breakdown level, meaning when this cracks, there's no support. But if you go to the extended hours, the next support is at 582. And then if that cracks, reacts as a resistance, there truly is no support until this gap that's waiting to fill below right here, which would be the best level for calls at 576.70. Again, just speaking for the future, you can write these levels down for the near future, right? Now, in terms of just understanding like big flips, you could see right here, a big flip is going to be the previous closing price. Just, you need to understand that the previous closing price, this is a very special level to be trading at, where strategies do work at the previous closing price all the time, but it's not created equally in terms of where the previous closing price is set. This is going to be one of those situations where this previous closing price is set at an amazing level. And you could just see, man, we had previous support right here when the SPY gapped up, right? So we had previous support, the previous gap breakdown level at 585.50. And then it had a very strong quick move within just 30 minutes to 589. So this is a massive level. The previous closing price is at a massive level. What that means is, if this reacts to support and SPY breaks above it, we're going up to 589 to 591 zone, right? And if the SPY breaks down and reacts as a resistance, that means we're going to be dropping to 582, but the overall focus would be buying the dips. Just use strong bullish 30-minute candlestick confirmations. So if you just looked at this overall chart, you can clearly see that the SPY cracked through the gap breakdown level and then it spiked back up. Is it forming lower highs? Because in order for it to actually be bearish, right, if support cracks, for it to actually be bearish, it has to form lower highs, right? Did it form those lower highs? Well, it started breaking above it. You could see right here, this is the support. The SPY cracked the support. It shot right back up, which is normal, doesn't mean it's bullish, right? If it forms lower highs, it's bearish. Did it form the lower highs? If you look at the overall chart, it's trying to flip bullish, right? This right here, facing to the downside, facing to the upside, is a very bullish pattern. The SPY is already attempting to gap up. So it is trying to flip bullish, and it's trying to turn this previous support that reacted as a resistance right here, then started to drop. It's trying to turn it back into support. It's trying to flip that trend, right? You could see the trend was flipping a little bit bearish for the short term. And then the bears have seemed to run out of gas a little bit. You know, once they got to the oversold levels and crack this support, it seems like they can no longer form those new lower highs. Now the SPY is gapping up. So the point is, you need to understand for the trend to shift back to micro bullish for the short term, the bulls really need to maintain above this previous closing price, this 585.70. If they maintain above it, you're going to see it's no longer going to be bearish for the short term, and it's going to be a bullish flip. And you can see, if you look at the chart, it goes straight to 589 to 591, right? So as long as we're maintaining above that, that's where we're headed. And then it is going to attempt to drop towards that 591 level, right? But in terms of an amazing level for puts where you couldn't really go wrong, there's a gap to fill above at 593.35 and previous support to react as a resistance. So you have previous support, SPY gaps down. Once it spikes back up, previous support is going to try to react as a new lower high, as a new resistance level, right? That's what I would call the breakdown and retest. There's support right here. The SPY gaps down. We can even call it a gap down and retest, right? The SPY gaps down. It retests the gap. It also broke down this support, retest the support, react as a resistance, gap close reversal. So that's the overall ladder that I wanted to walk out through you, right? I already explained to you in terms of what I'm seeing. You know, I'm focused on buying calls at the oversold levels. If we're gapping up, I'm focused on buying calls at the more overbought levels, previous closing price, and 587. And then we'll be on pace for 589 to 591. From there, I'm looking for opportunities on put options towards that like 590-ish zone, and then also put options towards 593.35. So I explained to the levels and where to potentially look to buy calls and puts, and then the oversold levels for calls if we open up flatter gapping down. Like I said, just keep an eye on 584, keep an eye on 585, and then 582, right? And then just to give you the overall ladder from an overall macro point of view, the gap reversal 576.70 level, that's an auto buy level where you can look to just kind of get in calls. And then the level above that is going to be 582. That's make or break support. If that cracks, reacts as a resistance, the bears take full control. If the SPY is maintaining to hold above that, then the bulls are going to maintain in control. Next level above that is going to be 584. That's the new make or break gap breakdown level. What that means is a gap breakdown, you can see right here, SPY gap down. If it goes through the support, there is no support. So it's a special level where there is no support since it had a gap, right? And then the next level above that is going to be the previous closing price. As you can see, the market is at make or break, but it's currently responding bullish. The bears are currently failing at that situation. So 585.70 is make or break, currently reacting bullish. Next level above that is going to be 589. Next level above that is going to be previous day highs, 590 to 591, potential put zone. Next level above that is going to be the gap reversal, previous support to react as a resistance, 593.45. So I gave you a price ladder. Obviously, not all of the levels in the ladder am I interested in trading at, right? So some of the levels just help give you a sense in terms of like profit targets if you're in a trade, or in terms of potential just overall direction on where market's heading, if it reacts bullish or bearish at the overall level. Make sure when you're using these overall levels, you are using the patterns and the strategies that I've been teaching you throughout these videos when I recap the trades that we ended up making on the day, right? So in terms of your overall best levels to be trading at, I explained it to you. Not each level is created equally within the ladder. So that's going to be it, man. Trade the best setups at the overall best prices. In terms of the trades that we ended up making on Friday, we absolutely crushed it, man. Take a look at this. So on the morning trades, we ended up buying 588 SPY puts for 50 cents a contract. And then we also had Amazon 202.50 puts for 22 cents a contract, right? So we absolutely crushed it on Friday. As you can see, both of those puts ended up going up absolutely phenomenally, man. Literally SPY puts directly at market open. And then as you can see, SPY just dropped the whole entire day, right? So like I told you, man, inside of Team Roar, the morning trades, within the first 30 minutes, you can make multiple 100% profit returns. These are the best morning trades that I've ever experienced within the market, man. So as you could see, man, the puts just fucking skyrocketed. These are the option quotes being quoted in real time because everything we're doing is alerted in real time, right? All written out for you to see, and you can turn on push notifications, get notifications to your phone, to your desktop, to your laptop. So with that being said, the puts absolutely crushed it. 588 puts quickly went to 116 cents a contract to then in the money in that particular situation, right? So yeah, the morning trades were absolutely phenomenal. That's 2 for 2 right there, starting off the day on fire. And then we had 588 SPY calls for 54 cents, and those quickly went to 71 cents a contract, right? So that's another great trade. And then the final trade right here was on 585 SPY puts for 51 cents a contract, and those quickly went to 72 cents plus a contract. Then later on throughout the day, they went to 108 cents for a 100% profit return. So in terms of Friday, that was a 4 for 4 day. The trades were absolutely phenomenal. In terms of my own personal trading, I had a loss on Moderna. The trade didn't work out. And then I had a small L on SPY. It wasn't my overall best day for trading. But due to all these wins, we had throughout the day, I was still able to go green. Now, with that being said, those of you who are serious about joining our secured private organization, it's going to be the first link down below within the description. Inside of Team Roar, you gain access to a real-time zero-date options trading alert system. We are known for buying cheap, low-risk, far out-of-money option contracts. We're known for selling them deep in the money for the biggest percentage gains within the overall market. In terms of this unique system that we've created, is very simple in terms of what makes us different from the rest, right? In terms of this system, we don't use stop losses. So we don't use stop losses because we don't believe in stop losses, and we don't need to use stop losses in terms of this style of trading when we're buying cheap, far out of money option contracts, right? So with these particular contracts, you need to understand that they are very cheap and they are very low barrier to entry, right? So you can put in your entire position size into these contracts, right, as your max risk per trade. So you can put in your entire max risk per trade, which could be a couple percent of your account. And you can put that into your entire position size. And then you're probably wondering, well, how can you make good money doing that since you're not risking a lot, right? You can make good money doing that because the percentage gains are so big. So we're aiming for massive percentage gains, 50%, 100%, multiple 100% profit returns every single month. We have a couple trades that we make 1,000% on, right? So the percentage gains allow us to put in less money. We're putting in less money, which means we're risking less. It also puts us in a situation where, since our entire max risk per trade is our position size, that means that we can let the trades expire worthless and go to zero. So if a trade doesn't work out, we're not stressed about it, because in terms of what we're putting into the options, right, that's the most we can lose. And we're putting in our max risk per trade as our position size, right? So we're not stressed if a trade drops 30, 50, 60, 70%, right? So with that being said, in my experience, when a trade does drop 50% and we decide to not sell it and we decide to hold it, 70% of the times, what we call dead play, it comes back to life and it goes in the money. We have the entire day for the contracts to go in the money. You understand? We have the entire day for the contracts to go in the money, man. Like those SPY 588 puts, we had the entire day from market open for those puts to go in the money, to make some good money on that, man. So it's a very cutting edge system when you're trading far the money option contracts. It allows you to pay less on premiums. It allows you to risk less. It allows you to hold trades. It allows you to remove stop losses. It allows you to do the complete opposite of what everyone else is doing, man. Options give you options, but far out of the money options, the zero date options, they will give you the most options within this market, where you can actually hold the trade for the entire day and you're not stressing about it because you're not risking a lot, and you're still able to make good percentage and good dollar gains because the percentage gains are so big, and because we're normally known for holding longer than the average trader. We're known for holding for long periods of time at times, which is how we're able to make such big, massive percentage gains. We're also known for timing our trades at the right times, which is another reason why we're able to make such big percentage gains in a very quick period of time, right? So I want to break that down for you. And then in terms of winning, when we're up like 5, 10, 20%, very small amounts for us. Very, very small amounts to be up like 5, 10, 20% on a trade with the contracts that we're buying. And we have the highest win rate in the game doing this. So when we're up a little bit, we like to add to winners. We add to winners and then to protect our new average cost. And the reason why we add to winners is to increase the winning. We normally don't add to losers. We add to winners because when we win, the winning tends to just keep on going within our favor when we're up on a trade a little bit and we get a confirmation to add more into that win, right? So for example, on calls, if the 1 minute chart's reacting bullish, we're breaking above resistance, we drop back down, it reacts to support, and it's looking bullish to hit our overall main profit target. Then in that situation, we look to add to winners, just giving you an example, right? So anyways, we add to winners to increase the winning. When we win, we tend to win big. It makes sense. And in terms of profit stops, we do set profit stops. So we don't set stop losses. Now we do sell moves. We don't let all of the trades expire zero and go to worthless. Sometimes we sell the move if it makes sense to just get out of the trade. But we do set profit stops. The reason why we set profit stops is to ensure that once we are agreeing on a trade, and especially when you're adding a protection new average cost, it's impossible to go green to red. If you set a profit stop and you're up on a trade, it's impossible to go green to red on that overall trade, right? And then we move the profit stop higher to ensure that we protect the bulk of our overall gains, right? So by moving the profit stop higher, it protects the bulk of our overall gains. That way, if the market goes against us in that particular situation, then we're still going to have the vast majority of our profits because we're moving the profit stop up higher than where it was originally placed, meaning we're not giving back the bulk of our overall gains as the trade is beginning to work in our overall favor, right? So I just wanted to break that down to you. The way we're trading is the complete opposite compared to everyone else that you know of, everyone else that you're following. This is a completely different options trade alert system. So it's gonna take time to adjust, and you're gonna be experiencing something that's completely different from what you're known for experiencing, right? But with that being said, man, I'm telling you, we have the highest win rate in the game doing this. The trades, they're far out of the money, and they do tend to go in the money. And I'm telling you, man, options give you options, but far the money options give you the most options. And in terms of this system, it's truly incredible what you can do. You can risk less. You can remove your stop loss. You can make the biggest percentage gains in the market. You can hold the trades longer periods of time to make bigger gains and for them to go in the money. The dead plays can come back to life and the trade can go in the money later, man. It's like on an overall trend day at the right time in the right entry, you can make the biggest percentage gains that the market has to offer, man. And the timing doesn't have to even be right on a trend day. If the overall trend is bullish and you didn't time it right, there's very, very good chances that some point throughout the day, those calls are going to go in the money. So like I said, man, this is very cutting edge and it does remove that factor as well, where it's just not as stressful. You don't have to worry about like losing because you know exactly how much you're going to lose, how much you're going to risk before you enter the trade. You don't have to worry about getting stopped out because there's no point of using a stop loss. If our entire position size is our max risk per trade, we're not stressed about losing our max risk per trade. And we know the contracts can go in the money throughout the entire day. So it does make sense to hold the vast majority of the time in our experiences because we tend to win, man. And we know how to time the trades properly, right? So with that being said, for those of you who are serious about joining us, it's going to be the first link down below within the description. Like I said on Friday, man, we had 4 straight wins in a row. This was fucking crazy, man. We're talking about 4 straight wins in a row on far out of the money option contracts. Who do you know is doing this in real time? So if you want to get access to our secured private organization, we do have a couple multimillionaires in our community. We have 2 multimillionaires in the community who are extremely active, right? And you gain access to the real-time trade alerts, to the zero-date options trade alert system. You gain access to my trade alerts as well. You gain access to our amazing positive community, and you gain access to everything within the group, man. So if you want to join us, it's the first link down below within the description. You gain access to our community chat and our trade alerts. So with that being said, it's the first link down below within the description. I can assure you we're going to absolutely crush it this week. I will see you guys tomorrow within the chat. With that being said, I'm signing off.